Well, after 4 years of stagnant growth, the commercial real estate market is roaring back. Sales were up 24% in 2012, and so far the strength has been in core markets. But with securitized lending markets ramping back up and lending standards loosening, many experts expect broad-based improvement this year. So for more on this, we are joined by President of John B. Levy and Company. John Levy himself is here. John, let's first talk about core markets. What are the core markets that we're talking about?
Well, I think there are 5 or 6 core markets: Washington, Boston, New York, Chicago, San Francisco, LA. Those are the 24-hour cities that all the people consider core.
And what are we seeing strength in? Offices, apartment buildings, condos? Where is it?
Not in offices. In apartments for sure. We're seeing a lot more building. For example, in Washington, starts this year in the area will probably triple the average for new apartments. That's a lot, especially in an area that's got concerns about the fiscal cliff.
I find it really interesting because, you know, everyone does the should I rent, should I buy calculation. Yeah. And more lately, it's leaning towards buying, and yet you're saying rentals are still on the rise.
Yeah, I think buying is a really good deal right now because rentals are going up. Markets are tight, but eventually it's so cheap to borrow money to buy a house that it's got to flip.
Is there a true market for securitized lending of commercial mortgage-backed securities?
Oh, yeah, there's a huge market. And in fact, right now, it's interesting. We are at the lowest rates since the collapse. In other words, since 07. So this, to me, is an incredible time to borrow as much as you can for as long as you can, because it won't be there for forever.
We saw the numbers go up fourth quarter, but a lot of that had to do with tax law threats, didn't it?
You know, I think some of it did, but those were the sellers. But don't forget, for every seller, there's a buyer. Yeah. So buyers are starting to become a little bit more optimistic. And I think part of this is because the securitized market is back. So instead of just being able to invest in 6 or 8 markets, you can now invest in 30, 40, or 50 markets because securitized lending really does broaden the platform.
Do you worry, though, about this, you know, especially stores, strip malls going, you know, the way of the dodo bird because of the internet, brick and mortar kind of going away?
I do worry about that. Everybody worries about retail. The internet is making making a huge impact. You know, Best Buy is a perfect example.
Sure.
They're having fewer stores, and the stores they're having are smaller. But that being said, there's still some strips that you want to own. Grocery anchored are obviously the favorite. There's some apartments that you want to own. Office buildings are still problematic because businesses are having a hard time deciding whether they want to expand, and many or just contracting in the space that they take.
So, and Google, of course, just announcing that they're going to open stores. Okay, so you're saying then it's the multifamily units still that you're looking at, not so much the office buildings.
Yeah, I think multifamily is a hot thing. We actually still like hotels, and I think we like them because if you believe that business is coming back, they can raise the rates every night. So hotels really haven't had much of a play yet, but we think it's coming that way. I still think that although multifamily has room to run, it's getting towards the top, getting a little top-heavy for our blood.
Right, because as you said, it's cheaper to buy. John Levy, thank you so much for being here.
Pleasure indeed.
Some good news.
Some good news indeed. We'll take it. All right.